Welcome back to Business Week here on Arise News. I'm joined now by Muktar Mohammed, CEO of Finance with Muktar, to help us review our top business stories. Welcome to the show and compliments of the season.
Compliment of the season. You're already Christmas.
Yes, in the colours, right?
Yeah.
Yes. So the first one is Dangote's. This plan to list 10% of his refinery and pay dividends in dollars. Is this a pragmatic solution to attract capital? Could this set a precedent for attracting capital into the Nigerian market? And, what are the pros and cons of this strategy?
Well, if in terms of president, I think he's not the first that's promising to pay dividend in dollars, because we've had that in AGOA Transnational at a point. And
ETI. Okay.
And also with Seplat. They've been, even Eltel Africa also, the dividend comes in dollar, even if they'll convert it to Naira. So, but the beauty about Dangote is the 10% stake. Ordinarily, when it comes to listing of Dangote, you don't see that 10% stake immediately if you look at all his holding. So listing 10% stake, and again, it's not the type that promise you this kind of dividend, and it's saying dividend of FX, paid in dollars. I think, again, the average Nigerian investor is always excited when it comes to dividend. Now, hearing that dividend comes in dollars, that is another extra mile. But for me, the point is having Dangote listed is going to be a very huge thing for the market. Not only because of the kind of in terms of liquidity that will deepen the market or helping the all-share index, but because of the economy importance of Dangote to the Nigerian economy. Absolutely. And that refinery to the Nigerian economy. And you see, as it stands now, the stock market is doing about 50% to the GDP of the Nigerian economy. When you have Dangote there, and you might have NNPC anytime soon, then you begin to get the market doing over 70% of the global of Nigerian GDP. And once that happens, that gives international investors a barometer of what the Nigerian economy
Absolutely.
is like, not like what it is now. So many key drivers of the Nigerian economy are not yet listed in the market. So you see that contribution, but we are going towards the area outside the banking sector. If you want to look at those listings, you realize that most of those listings are not really the main key player. When you talk about the banking sector, when you go to the brewery sector, but when you look at the oil and gas sector, yes, we are seeing Seplat there, we are seeing Oando there, Arada there, but we need to see a big player, a major shifts that will shift the market perception, especially globally. The only challenge is that means like what we normally observe when it happens. When Dangote will sniff, then the market will definitely sniff.
Well, yeah, look, it's going to, listing even 10% of such a big, and we don't know what the valuation is, but it would have a real significant impact on the market. And I wonder how this process will then be approached by the regulators, especially when you then introduce the element of dollar dividends. Because if you already account for such a significant share relative to other individual listings of the market capitalization, and then you want to pay dividends in dollars, it's going to be a lot of structuring from a regulatory perspective. And there's the issue then of even the FX demand issue, right? When you think about the relative stability that the Naira is enjoying now, what this means for the foreign exchange market in the future. But interesting times here. Let's scoot over to the US. So we saw this Fed decision, rate cut 25 basis points, which, the odds were pretty high that it would be about. But the question I want to ask is this a reflection of a real economic, is there a strong economic rationale, or do you think a bit of politics crept into this decision, especially as we saw some decent, differing views within the Fed committee about the extent of the cuts?
I think when you talk about the politics side of it, you always look at the president always saying that the Fed should cut rates right from the day he came to office, and he has also been at loggerhead with members of the Fed and also even the governor of the Fed. So definitely you could look at that as a political angle of it. But now look at it globally. Now look at inflation globally. Look at the US inflationary rate. Look at the consumer index, a perception of the US. Look at how improvement has come in from that space. So you definitely will say, okay, economically it makes change, because what is happening now, cost of funding are coming low, and a lot of smaller business are beginning to have shorter funds to borrow to grow their business. Then consumer index perception is getting high.
Yeah.
Since the average American is now having more money to spend in the consumer space. Then when you look at that, definitely you think, okay, that's the right thing to do at the moment when you look at the inflation and all that. Again, when you look at globally now, like I always say, when it's hike, it's global hike. Yeah. When it's cut, it's global cut. Yeah. So economically, we are seeing a little bit relative stability.
There's globally. A bit of policy alignment around the Fed.
Around the Fed everywhere globally. Okay. So definitely, you there's a political angle to maybe the pressure from Donald Trump. But again, when you look at the economic side of it, also you have to agree that definitely it's time to cut rate in America.
Yeah. But I guess it'd be interesting to see what then happens with the Fed transition in terms of leadership, because that's perhaps where politics might even play.
He's already saying he's already working towards that already, making it that it might even happen sooner than even.
And the market's actually briefly reacted to that.
Exactly. Yeah. That's the difference. Like I keep telling people, that's the difference. When you see the great cut, the first place you need to see a response is the stock market. Yeah. Once there's a definite rate cut that is in turning with reality on ground. So where am I going? Nigeria. Yeah. You see those rate cuts, but rather you see the negative, you don't see those impact on the market. So that tells you that the reality between those cuts and the market are not synergizing together. But when you see globally, once there's a rate cut, it favors the stock market. Once there's a rate hike, the market responds. So lesson for us.
Okay, China. So China's exports to the US fell almost 30%, even after President Xi Jinping and Donald Trump shook hands on a trade deal. It's either that Chinese exporters don't believe that deal will hold water, or they pivoted to new markets. Which is it?
New markets.
New markets
already. I think they saw the writing. Outside the tech companies that are still doing major business with with America, if you look at these numbers, the other manufacturing sector, the other service sector, the service sector is tech sector, but you look at the manufacturing sector, and I think they are beginning to look for new markets because they realize that it could be we have a deal today. It could be tomorrow. He said, no deal again. You have infringed on the deal. So I think they are being very, very cautious. And after that, they are beginning to look at new markets, especially with the EU, with Russia also. And don't forget that they've always had Africa as one of those markets that has really believed in the Chinese product. So they are beginning to move that towards Africa.
And it's interesting you say that because despite Chinese exports to the US falling by 28.6%, China has still managed to grow its exports by 6%. So it does raise a question about whether Trump's tariff strategy, at least relative to China, is kind of misaligned with the realities. And this is what you say.
No, definitely
China
it is.
China does have options.
Yes, definitely. When you look at those reality, what really is American trade deals with China that is so high? It's all about the tech companies. And if you look at that tariff deal, it didn't affect them. Yes. They were exempted from it. So definitely there was not so much China were really losing out in terms of their trade deals with America. Because what happened is that the American major tech companies have their base of production in China because of the cost of production.
So the US is threatening to exclude South Africa from AGOA, offering just a one-year extension to all the other countries. I feel like the US, we know the trade issues used as leverage in negotiations for other things. And I feel like AGOA is now the pawn in that sort of type of maneuvering geopolitically. So is this about alignment in the BRICS, or what is this about?
I think it's alignment. Outside, if you look at the issue with South Africa as it stands, has nothing to do with the trade issue now. There's a political angle. You remember that issue G20, then also the whites looking for asylum in the United States because they are not treated fairly, and Donald Trump saying they are not treated fairly. And now excluding them from AGOA is that South Africa is the largest economy in Africa. So excluding them from AGOA, it doesn't...
But they haven't excluded them yet, but he did say that it's something that he would look at if Congress...
You know when Trump tells you that he's going to look at something, then he already has the mindset on what he really wants to do. He's just trying to see how well to do it. Because if you look at AGOA, really, but the good thing is that nobody expected him to extend that deal. So everybody was thinking he would just say it's off. I think, again, that's another strategy. Maybe he's beginning to look at Africa, that we still have something to do. Look at Nigeria, looking at the MBS, we have done about export to America, about $700 million. So that shows that there is still, and this also inclusive, despite we are not exempted from tariff. So this AGOA deal, when it comes into place, there's a way of exempting Africa from its normal tariff issues. And that will make Africa begin to become maybe a bride, because it has to look at ways to be able to counteract what China is doing. Even if it has looked at Africa as not a market for that. But I think in the longer term, it will be to the disadvantage of America if they are not doing business with Africa.
Yeah, and I'm thinking from the perspective of an African manufacturer now, manufacturer of agricultural goods. Essentially, this AGOA extension, which is 12 months, you're telling me that my potential export market has a 12-month shelf life. So what can I even do in terms of my export strategy? Should I be looking at new markets? What should I be thinking?
We should be looking at, well, of course, they should be looking at new markets. Remember, again, even if you look at the AGOA strategy, I think it was a strategy that extended over 3 years. But if you look at the impact in terms of trade volume, it has not really impacted so much to the African market if you compare to what the American product does into the African market compared to what the African product is doing in the American market. I don't think we will have so much to lose. We are doing more business with the Chinese. We are doing more business with the Europeans. And these tariff issues, again, and they're just 1 year. And when you look at what are we producing, what are the seasons for this production, like you said, you have 1 year to rush through so that I can enter the American market. Those are strategies that we look at. But definitely, I don't think it's going to be, it's an advantage also to the African. I think they should still look at it. It's a proposal, and I expect the Congress to say, look, can we just do it like this? There might be a negotiation around the corner.
I'd imagine that the South African government will have trade negotiators.
They said they don't want to be exempted from AGOA. No. They said it themselves.
They said it. So hopefully the Americans listen, but we'll see. Thank you so much. We've run out of time. Thank you so much, Muktar Mohammed,
My pleasure,
for joining us.